Good morning. I'm Dan Noone. I'm the CEO of G2 Goldfields. We're listed on the TSXV venture under the symbol GTWO and on the OTCQX under the symbol GUYGF. We have a high-grade discovery in Guyana in the Cutie district. The initial resource was out in April 2022, combined 1.2 million ounces at 9 grams a tonne. We are planning a follow-up MRE for the first quarter this year. We're also expanding our exploration program, and we just released the closing of a $22 million investment by AngloGold Ashanti into the company.
Dan, thank you very much for the introduction. Good to be talking to you again. It was a kind of quite a roller coaster year last year. The share price took a beating along with almost every other kind of junior resources company, but you had a kind of an overlay of political risk as well. There's lots of positive to talk about in the G2 story and the news flow that you've got going. But let's start with the kind of by grasping the nettle of what happened on the kind of geopolitical front and how you see things panning out from here.
Yeah, okay. So in November, Venezuela, the border to the north of Guyana, once again proclaimed that they had a claim over the Essequibo region in Guyana. And this dates back to the colonial period of the British, back in the 1870s, and the new Venezuelan government. So that was settled in the late 1800s, and in 1905, the tri-border between Guyana, Venezuela, and Brazil was set atop on a border region in Guyana, where it is today. So Venezuela has brought this up again a couple of times in the last century. Every time it's when there's problems at home. Obviously, the oil discovery in Guyana has precipitated this one, along with Maduro's 20% approval rating internally in country. It was quickly resolved. The Americans, the British, the Brazilians, CARICOM, the Organization of American States, all came out and denounced Venezuela. They had the meeting in the Caribbean with all the Caribbean leaders, and the Argyle Accord was signed, where basically both countries agreed not to resolve this by violence, but through legal means. And so that's where we sit today. So that's that's done. I'm sorry, I missed that. So that the Argyle Accord has been assigned, and that's an international treaty. Well, it's an agreement. It was a letter basically between Maduro, Venezuela, and Guyana that they would basically solve this by legal means and not by violence. So, and it's good that all the other countries in the regions made it quite clear that they were not backing any kind of aggressive takeover by Venezuela, but also the Americans, the British, and obviously the Brazilians, who have interest in the region. So, I mean, I think it's once again a storm in a teacup. It was settled back in 1901, and if you bring it up every time, maybe Australia should claim the South Island, New Zealand, because we've got no good skiing. But I don't think that would go down very well either.
Okay, good. And does it come up in conversations with investors when you speak to them now? Or is it something that you're kind of just gradually putting to bed on a kind of case-by-case basis, and education and things like this kind of will help?
I had 2 calls this morning and it wasn't brought up actually. So no, but we tend to bring it up anyway in our presentation. We have a slide there just to clear the air, because basically, it was annoying and it did affect our share price. Obviously the Guyanese government took it seriously and circled the wagons. But I think investors settled down now. America's there, especially with Exxon and Chevron in the big oil fields here. I think everyone's comfortable that nothing's going to happen down here militarily.
Okay, good. So that aspect of political risk aside, you've just put out some the news about the strategic investment from AngloGold Ashanti, who have bought 24.5 million shares off you at 90 cents. Versus your current share price of 74 cents-ish. But it was it was much lower than that in December when it was announced, wasn't it?
It was. It was in the 60s, and when we closed, it was when we announced that the deal was 57 cents. So the Venezuelans didn't help us very much there, but AngloGold behaved like gentlemen throughout it. We'd started that negotiation before the share price dropped off, and we stuck with it. So it was basically, Anglo have made a decision that they'd like to be in the Guyanas. They like our project. They had their team from Perth come out. It was 2 days travel each way, 6 days on site. And that was really to see, one, that it was actually real when you put out such good results, that it actually all hangs together and they had their full team there. And two, can they see a district scale deposit forming here? And that was really their remit. And then they went home and they obviously think they can. And so we sat down with their business development team and nutted out a deal. We're comfortable with it.
What would they, when you say district scale, what do they talk about in their minds? I mean, is 5 million ounces a district scale, or is it 10 million ounces or 15? I mean, what's a district scale play?
For them, I think it's what they were alluding was 10 to 15 million ounces in the district. So that's what they see as something which is a district which they'd like to get into. Smaller than that, it's piecemeal. And that was one of the things when we first started, was we wanted to put together a whole district and not postage stamps, because at the end of the day, especially in these greenstone systems, you tend to get a series of deposits. And if you can find tens of millions of ounces in these districts, but you have to own it. So, and that's what we did originally, except for the little bit to the south of us, which is Reunion Gold. But generally all the way to the north for 17 kilometres, we have that belt.
And I recall, I think the last time we spoke, Brett Davis had been a structural geologist, had been out, was it April last year, or was it perhaps more recent than that? But he was crucial in kind of helping you understand the kind of how to unlock, or the code, or how to unlock the key. Or, I'm fumbling for words, but you know what I mean, to understand the pattern of mineralization across the district.
Exactly. So we've been doing a lot of good structural work up to him getting there, but there was a few things we had missed, which we really did unlock the real structural controls out here, which is these intersection of these two planes, which gives you the fluid flow pathways for the extremely high-grade material that we see at Oko Main Zone and at Gaddy. And as we go around to the northwest, out at Oko Northwest and up to Aramu, we see those rotated 90 degrees, but those same intersections and those same patterns. And definitely Brett was really key in that. I mean, obviously, the team themselves had the geological savvy and the ability to make the measurements and think about it, but Brett really did help us bring it all together by asking all the hard questions, because sometimes as you advance your theory, you start to believe some assumptions you had at the start which maybe weren't as solid as they should have been. And when Brett came back and deconstructed it all and we put it back together, it really fell into place. It was a great piece of work over a 2-week period there.
And sometimes when you're working on a theory like that, you've got with a whole mass of data, you have all of the information kind of floating around, almost kind of like proto-thoughts or proto-conclusions in your brain, but it just requires someone external to help everything crystallize. And to kind of form, to fall into place, so to speak.
Oh, exactly. And it's like, well, I haven't seen that, so go get the core. And you get it out again, it's like, oh, it could be a bit different. And that shearing has been captured by the other phase of shearing. Therefore, that is the timing of these events. And it really became clear that the gold was the final event. So it was all the other things, the alterations, the deformations, that was all pre-gold. And so all that architecture for the fluids to flow up, that high-grade fluid, was already there. And so basically when the event came, it came up those fluid pathways where it intersected the best chemical traps, it dropped out. So that was, it was a very clear pattern. And then when we went back to the office and said, let's plot out all the plus 30 gram samples, they all fitted into these northeast plunging orientations, which paralleled the lineations. So, and one of the lineations actually had gold on it, so it was fairly obvious as well.
So it's a mixture of a fluid pathway. So you've got to have the fluid. There has to be kind of a pathway, a fracture system for it to flow along. So kind of a linked up permeability, and then there comes a time when there's a kind of a preferential, presumably temperature, pressure, and chemical trigger which causes the precipitation.
Definitely, and in different rock types it's different. So in the carbonaceous sediments, where we've got the large quartz veins. Those quartz veins have become brittle, but originally they captured country rock into the vein, and through the deformations, that country rock has been thinned out and formed stalactites. And so when the fluid passes through that quartz vein material and hits the stalactites, it drops out. And so we see these carbonaceous sediments form stalactites and drop in gold, but also sericite stalactites, the gold is dropping out on that. So it's really just a chemical change. And once you get that one bit of gold dropped out, the next and the next, and so you get all these nuggets forming along these quartz veins. In the magnetite-rich material, which is Guyana Central Zone, you've got it's the magnetite, which is the so classic like a banded iron formation. The fluids pass through, traveling as a bisulfide gold complex. the sulfur is attached to the iron from the magnetite. The iron grabs the sulfur, forms pyrite, the gold drops out. So we get those broader zones of more disseminated mineralization, like you see at Gani Central, but also down in Block 4 for Reunion. But in between now, we've got Gani South, which is back in the carbonaceous sediments, and that's where we've got the 11 metres at 37 grams a tonne. So you're seeing this repetition of geology, the same structure running through it, different styles of mineralization forming from the same fluids along the same structural trend, generally with the same orientation though. So it's the same orientation of the fluid pathways, just different traps.
I've also seen some very, very high grade numbers. I think in early December you put out some figure with kind of 1,275 grams gold over a kind of a very smooth, a vein 0.8 meters of the intersect. How do you cope with those? What do you do with the high numbers? Obviously, there's a kind of standard practices in exploration and in resource modelling to do a top cut. But I was just wondering if you could talk me through how you're managing those kind of high grades and how much it kind of influences you and pulls you in one direction or another.
Well, for reporting reasons, basically, we don't spread those, right? So in that intercept, we went through shear 3. I think we had 9 metres at 13 grams. Then we had a 6 metre gap. And then we had about 0.8 metres at 1,200 grams. So we reported them as separate intervals. Now, that second interval was an extension vein adjacent to the main shear. So it had VG in it, and it was like quite a spectacular number. But it's a narrow vein. The vein was only about 3 centimetres wide. The sample was 0.8, so that's why it got reported as 0.8. So what you have is these shears, and parallel to that, or perpendicular, you have extension veins. So we see them all the way along the shears, but they're only really well mineralised in these high-grade zones. So how do you deal with that in the resource? I'm not totally sure. We'll talk to the resource guys because they are not as anywhere near predictable as the main shears. So when you get an extension vein with high grade in it, you sort of have to create another domain, I think. And whether you can really get anything more than inferred out of those, unless you get really, when you're mining and you're basically doing high density drilling, maybe that will come later. But in general, we know why they're there. They're just another nice brittle host within that pipe of a fluid flow, and you have to report them. You can't not report it, but the main event here is the shear zones, the extension veins, just add on ounces. And in a resource calculation, I'm not sure how much of that will make it in. Okay,
so Q1, you've announced that you're going to be putting out a new resource update. You've given the kind of Q1, so we're in there. So in the next kind of 2 and a bit months, how much extra drilling since the previous resource has gone in, and kind of what are you looking at? Is this kind of an incremental thing, or is this a step change?
Probably about another 40,000 metres of drilling has gone into the Oko Main and the Gani discovery, and that will make up the new MRE. So there's a bit of a step change because Gani wasn't in it last time, and neither was Shear 1. So Shear 1 has the same style of mineralisation as Gani has. So they will come in, and they're broader zones of lower grade mineralisation, although Gani South is that high grade style of mineralisation. And at Gani Central, the footwall averages 4.5 metres at 10.5 grams. So that will go down and form a high grade narrow underground. But at surface, you have 25 metres averaging 2.5 grams. That hanging wall averages about 1 gram. So what we'll see this time is we will see open pits designed over the Oko Main zone and over the Gani zone as well. So we think those pits will be high grade. We ran Whittle over the Oko Main zone after the last resource, which we kept as underground, and you generally get about somewhere between 2 to 3.5 grams if you put a pit over it, depending on how deep you take it. And then that's a discussion we'll have. Certainly our engineers say, well, you're going to have to take all the saprolite off before you build any infrastructure. So if you're looking at reality, you've got to build a pit there which goes down to 70 metres to take the saprolite. Last time we did that, it'd be about 2 grams a tonne. Then you go straight into shear 5, which is running an ounce. So if you're looking at it from a mining point of view, that's what you'd do. And then you do shear 3 and 4 at the same time. You take your pit back. That would include shear 1. So something will come out of that, which I think will be around about 2 grams as a pit. And the underground will be as high grade as last time, if not higher. At Gani, because
so you'll go down on a decline from the pit.
Yeah, absolutely. Yeah. That's what you'd do, and you'd really go after shear 5 to start with, that high grade zone there, because that's running an ounce, and that's really for us. That's payback. That's like zone 7 at Porgera. It's like Payback Hill at Piarina. It's like That's what you do.
Yeah. So you pay back your capital as quickly as possible off the high grade material that you can access quickly.
Absolutely. So because one of the things about evaluation here of the deposit, and when we talk to the major companies, they say, we're looking at IRR, and that IRR includes what we've got to pay you. So there's a couple of things you can do to increase the value that you can get paid. And so that is shorten the timeline to production. And in Guyana, that can be done. And the government's very supportive. Really, it's 2 years of baseline studies for the environmental, and then you can apply for your mining license. And so if you've got all your ducks lined up, you could be in production in 3 years from now at the fastest rate. So that's fine. And then basically, if you've got a low capex rapid payback, all of a sudden, you can get paid a lot more back here by the company who's buying you, rather than saying there's 10 years to production, you've got to spend $1 billion and there's 10 years to payback. Well, then there's no IRR in that. So,
we're jumping around a little bit, where they're packed with information, but let's stick with the MRE. So you're adding in 40,000 meters. When was the drilling cutoff, and have you had 5 rigs running since you did that drilling cutoff?
Okay, drilling was cut off for the Christmas break, which was December the 17th. Now, we've still got 3,000 samples at the lab, but they're starting to come in now. The lab's promised us by the end of the month they'll have us to them. Have them to us. So we'll see. And that drilling we decided would be what would go into the MRE. And then we started up with 5 drill rigs about 10 days ago. So we've got 4 on the Oko main zone, 1 at Gani. And when we get all our assays back, because we also did drilling out at Oko Northwest and Oko North in December. And so we plan on following up those areas fairly aggressively as well. So there's a 2-pronged attack here. There's basically, we'll keep chasing the high grade at the Oko main zone and Gani, to expand high grade mineralization. But we're going to focus heavily on Oko Northwest, Oko North, and then eventually up to Aramu, whilst we are, doing a lot of trenching, following up the soils at Tracy and Amsterdam to a degree. So there's a lot going on, but still very much an exploration play, but with the idea of de-risking and shortening timelines to a potential mine for whoever builds the mine.
So that leads into the kind of the production timeline. So you've got 5 rigs and you're doing a lot of exploration, step out stuff, but you will also be working on, 10-year mine life or an 8-year mine life. It'll pick your throughput rate, just to try and de-risk that kind of front end of the production curve.
Absolutely. I mean, I think most people always try to jam their resource into 10 years because outside of that, you don't get any NPV, which is sort of like, that's what's driven by the markets and the consultants, but not necessarily where the end value is, which is a long life mine of, and larger tonnages. So we would obviously focus on that. To that end, I mean, that's why we've always been a bit, not wary, but certainly not totally focused on going too deep. We know that Oko main zone's open to depth, as is Gani, and whilst we can continue to hit plus 10 gram material, we'll happily drill deeper in those zones, right? But just adding ounces at depth doesn't change your net present value or your NAV, really, right? So what we need to do is make new discoveries at surface along that whole trend. So to that end, we've been doing a lot of work out at Oko Northwest in the last 3 months. Like I said, we drilled about 18 holes in December, waiting for assays. It really is a continuation of the same geology and same system as the Oko main zone. It's just been folded around that regional fold, so now it's striking northwest. But we see all the same structural fabrics, all the same controls. And we did this with Brett last year. It was one of the great things that Brett helped us out with, all the way up to Aramu. So we were pretty comfortable that we can find more Okos.
Are they the same kind of dips? Obviously the orientation has changed, but are they still subvertical?
Yes, exactly. So basically, when you're running north-south, you're plunging to the northeast, and now you're running out northwest, and you're plunging off to the northwest like that. And so it's plunging out towards 300 degrees. But you still do get those other flatter zones, which we see in the Oko main zone. So you've got your steep plunge to the northeast and that flat plunge back to the southeast along those same plains. We see that sort of thing as well happening out there. And, they are the 2 main trends, basically northeast and southwest along that plane of the shearing.
You talk about consolidation, IRR, which involves kind of a purchase price as well as the kind of development curve. AngloGold Ashanti they own less than 12%, 11.7% now. do you see that as a kind of a controlling block? I mean, do they have board seats? I see they've got some non-dilution rights. Is there anything else have they got preferential access to the drill core, to the data? Do they see it before anybody else can?
No, and none of those. No board of directors. They have the obviously non-dilution rights, but no special access to data. It's the same as everybody else. Obviously, we're friendly with them. I talk to them. They give us good advice, but they don't need that, and certainly I don't think they want that. There is no standstill clause. They can buy in the market, so they've got to be careful that they don't have inside information, and that's clear that they don't. So we see as a front row seat. Internally, insiders still own 28% of the stock, so we have the control block ourselves. So I think it's a good thing they're in the district. They're showing a good intent. We get along well with them. They understand that we only sold 11%, not 100. So that later on we can negotiate that. But I think as adults, and as the play is de-risked and the size potential becomes apparent, you can come to a real decision about what the value is. And there's also other players in the district. Of course, on the Reunion side, you have Barrick as a major shareholder, and you have La Mancha. So it's not a single company play, but over the next 12 to 18 months, I think you'll see the district come together, and certainly one of the main players here will take a lead role, I think.
And with the funds you've got, are you going to exhibit discipline, or are you going to suddenly go out and kind of buy yourself fancy lunches?
No, we'll stick with the same discipline. It's just unfortunate for most people that I'm a bit parsimonious with the money, right? It's just, but no, we always stick with methodical exploration, and we'll do the same. We are building the team up. We've added another geologist recently. We may add a couple of more as we see the ability to drill more if we can. So all drilling is always related on previous success, but we've got Oko Main, we've got Gani now, which demand rigs. Now we're exploring Oko Northwest. If we hit there, we will expand again. And when we get to Aramu, which I've been chafing at the bit to get back to for 2 years, that will demand more rigs and geologists too. So, we don't see ourselves slowing down, but it's always driven on success. And sometimes you get confused, you've got to step back and redo your model. So, it's not just drill and go crazy, but we will be drilling a lot. There's no doubt about that.
And what about metallurgy? Because whenever I hear carbonaceous shales, I always kind of think of preg robbing, and I think of Syama and the problems that Randgold and everybody has, and then Resolute and you name it, have had with a highly preg robbing host rock. I just wonder where you've got to on the metallurgy side of things.
Yes, we've done bottle roll tests on the Oko Main Zone and now on Gani as well. And the Oko Main Zone averaged 98.5% recoveries. So what we don't see there, if we don't see activated carbon, we don't say, there's carbonaceous material in the sediments, but yet they're not shales per se, they're just carbonaceous sediments. So they've only been subjected to greaseous facies metamorphism, and you just don't start generating graphite until you get to amphibolite phase metamorphism, and it's granulite facies where most graphite deposits are developed. So you can get graphite forming from higher pressures and on shearing, but we haven't seen any graphite in the ore yet, or the mineralization yet, and certainly the bottle roll tests haven't shown any robbing. So we're pretty comfortable with that. We haven't seen any metamorphic grade greater than greaseous facies in the whole district. So we're pretty lucky there. So as opposed to the Archean, where you do get that, you'd be between amphibolite facies and back to greaseous, and you have those graphite beds. Yeah, we don't have any of that. And
you mentioned that the earlier when you were talking about the kind of the chemistry and the precipitation of the kind of the sulfide formation, so the pyrite formation and the gold precipitating out separately, does that mean that the gold's on fractures, or is there some inclusion of gold within the lattice of the pyrite?
No, we don't see that at all. So when we get in, Brett showed us this as well, we see gold precipitating out on fractures in the pyrite. So I mean, if the pyrite's formed as fractures, and you see gold dropping out on fractures, also pressure shadows, you see it dropping out there. But yeah, no, not encapsulated at all. So that's good.
Good. Right. Well, there we go. I mean, that's a pretty useful roundup. You've spoken about AngloGold Ashanti looking at this kind of with a view to seeing kind of a district scale play. They've got a non-controlling interest. You've got enough funds to run full gas this year and possibly into next year. Explore and de-risk. Is that the basic approach?
Exactly.
How do you change the market perception of your company? How do you change the valuation? Do you feel as if you're kind of no CEO will say that they are fully valued on a resource ounce or an EV per ounce basis? So what's the strategy there?
Well, I think we have to get out, and we started last year, getting out to our more conferences and certainly more meetings. And we've certainly got a full book in the first half of this year. I think we're starting to show, I think with the Anglo coming in, it gives us credibility that this is a real deposit. It's like even the Anglo guys said they had to come and see it to see that it was real. And so with that validation from AngloGold, I think we can talk to that. We can say, well, it was good. They can buy it at 90 cents. You can buy it at 70 all day and not get hurt here, right? And so I think we can get fund managers to come in and believe this is going to be a mine. We thought we would achieve that with our first MRE, but I think now with the validation of AngloGold, and as we keep moving forward, talking about how this really is going to be a mine, and I think that gets people over the line. Because I think the sort of early stage speculative investors, we need to, even though we like those guys, we need to move beyond that to more larger fund managers who want to come in and buy it because it's going to be a mine and there'll be a transaction down the road. So that's the investors we need to find. And to that end, we need to keep telling the story that this is basically going to be a mine. And we've got the validation, and we're going to keep making it bigger.
Dan, thank you very much. It's been a great update. Really good talking to you.
Thanks very much, Mel.